Hey, what's up guys? This is Mark from Trader Today, and in today's video I'm going to talk about how the trade war and Trump's rhetoric and China's retaliation are literally destroying the stock market and hurting it. And I'm going to kind of cover some of the articles and also show you guys a chart and how that is and why. And why do I see coming very, very soon. It's not good for the stock market. So let's get started. All right, guys. So I just want to quickly show you again the one-year chart of the S&P 500. That's something I do really quickly. Again, the market has been trending really nicely. Again, the last 3 months it's been just all over the place, very volatile. You guys can see sell-off in February, bounce back, and another sell-off after the initial $50 billion tariffs on China, which actually in this day, and then China retaliated on this day. And it literally has been going back and forth, back and forth, back and forth. And today was actually the jobs report, and it was actually a decent number. Nothing to scare away investors from the Fed increasing interest rates higher than expected. It was actually a really good jobs report number. Let me show you guys really quickly. As you guys can see, the consensus was 175, and the actual was 103,000, which actually was below expectation, which is good in a way because if it was more than 175, then the market would have definitely reacted with a more sell-off, and unemployment rate stays the same, so that's good. And also the hourly earnings month-to-month change was 0.03, which that was consensus. That's good. So overall, the jobs report was kind of had mixed results, but most important thing is it wasn't a huge number to kind of scare away the market. Because again, when the jobs report and employment is higher than expected, again, the market may get scared that may cause inflation to increase faster than anticipated, again, which can cause the Federal Reserve to increase interest rates faster than expected. So again, nothing other happened, so that was good for the market. But then what happened was this. Trump on Thursday night, as you guys can see, President Donald Trump ratcheted up the trade war rhetoric with China on Thursday evening, saying he was considering another wave of steep tariffs on the country's exports to the United States. And this is what he said, actually quoting the president: "In light of China's unfair retaliation, I have instructed the United States trade representatives to consider whether 100 billion of additional tariffs will be appropriate." And again, this is additional from the original 50 billion, tariffs on Chinese goods. And again, this is in addition to the tariffs that the U.S. that Donald Trump did impose already on steel and aluminum. So there's the tariffs on steel and aluminum, and an additional 50 billion on goods. And now they're considering another 100 billion in tariffs, which, if you really think about it, and then China's retaliating with the same thing. For every $1 billion that the U.S. Again retaliates with tariffs, China comes back with another billion. So, because China came up with another 50 billion as well, and then now, of course, Donald Trump is considered another 100 billion, which again China will come back again next week, and they already said that they were going to come back with more tariffs against the U.S. So if you think about it, if none of that rhetoric would have happened on Thursday, I really think the S&P 500 would have broken out of this 266 level, and we would have gotten a bounce. And with the earnings coming very soon, we would have gotten a continuation of that bounce. But that trade war rhetoric between China and the U.S. is literally just destroying the market, and it's not good. Again, investors do not like trade wars. They're not good for business. They're not good for consumers. They're not good for anybody, because trade wars are actually inflationary. Because if it costs more money now for consumers to buy a product or service that comes from another country, for example, from China in the U.S., again, that's going to cost more money because of the tariffs. Then again, that is inflationary. Because inflation literally means prices are going up. So that's really bad. So yes, this is real. The rhetoric, the trade war is definitely hurting the stock market. Again, you can see the huge sell-off with actually pretty decent big volume that that does not look good, and it's negative. And then you could also see the VIX, also having a green day, up, let's say, it was up 13%, and then it looks like it might continue to trend now. It was literally going down after this inverted hammer, and it looking it's gonna reverse. But again, Donald Trump came back with retaliation against China, and honestly, I don't really see this ending anytime soon. And because of that, I really think the stock market, the S&P 500, could definitely hit new lows pretty soon. I could actually see it breaking below this 252.92 and also the 200-day moving average. Again, because of that rhetoric with China and the United States, I could really see that happening very soon. Again, just a reminder, guys, earnings don't really start until like mid-April, and we're still in the beginning of April. And if that continues, that rhetoric continues, I could see that happening. The market creating newer lows, and again, that does not look good, because if that newer lows happens, people are gonna start getting out. Because then the market could really start downtrending, and it could definitely create a bear market. So as you guys can see, the 200, it tested the 200-day, it bounced off really nicely actually on Wednesday, and Thursday had a little, didn't really know, this candle didn't really know what to do. But again, they were waiting on the jobs report today. But again, that $100 billion announcement that President Trump said really brought down the market down, and then with some decent high volume actually. So because of this, I really think that the 200-day may actually break. Next week, we do have a FOMC minutes on Wednesday, which again, nothing should be out of the ordinary, especially since we already know how many hikes the Federal Reserve expects this year, which they said they're expecting 3. They already have 1, so they're looking for 2 more. But again, there's definitely this trade war tension between the U.S. and China are definitely hurting the stock market. So that's pretty much all I wanted to talk to you guys. Again, doesn't look too good to me, to be honest with you guys. Honestly, I'm actually turning more bearish by the day. And if these levels break, I'm definitely going to be bearish for sure. And I could definitely see a bear market forming after this. And if earnings come out and if earnings don't do anything, I could definitely see more sell-off coming pretty soon. So, all right, guys, so that's pretty much it. Hopefully you guys learned something. If you have any questions, feel free to make some comments. I hope you guys have a great weekend. And again, stay safe with the stock market. Do your research before you make any trades or investment ideas. And you guys will hear from me soon. Have a good one, guys. Bye.